So, dear colleagues, let's resume our today's second meeting with point number 13, that is public hearing on digital euro. So we will now start our public hearing. The hearing is taking place in the light of the legislative proposal on the establishment of the digital euro put forward by European Commission on 28th of June 23 as part of the single currency package, which also includes a proposal on the legal tender of the Eurocash. Our discussion today aims to look at the different design options and implication of the digital euro project. In particular, the discussion will focus on assessing the risk and benefits of the various perspectives, for instance, privacy, resilience of the payment system, financial stability, and implication for the banking sector. The hearing will also be a good opportunity to draw comparison between other central bank digital currency projects that are being carried out. ECON is the lead committee of the European Parliament and now is assessing the proposal of the Commission and working on its report. The rapporteur of this report is Stefan Berger from EPP. We have now 4 distinguished guests as our experts for today's hearing. The first that will be on a remote connection is Ignazio Angeloni, part-time professor of Robert Schuman Center, European University Institute in Florence, and senior policy fellow at SAFE, Goethe Institute, Frankfurt. The second distinguished is Miguel Fernandez Ordóñez, former governor of Bank de España and former member of ECB Governing Council. Third is Marieke van Berger, head of Department of Retail Banking, Payments, Digitization and Financial Market of European Association of Cooperative Banks. And last not least, Vicky van Eyck, Executive Director of the European Office of Positive Money. I want to express our thanks for accepting the invitation for their schedules and ask them to start out the debate. The organization is as follows. Each speaker has up to 7 minutes for introduction, and then we go for ordinary round for question and answers. So let me now pass the floor to Mr. Angeloni, who should be on the remote. Please.
Good afternoon. Can you hear me?
Perfect. Go ahead.
So I'm pleased and honored to participate in this hearing. You may remember I have already contributed to your work on the digital euro earlier this year in April with a briefing paper. So let me say up front that I consider that the involvement of the ECB in the discussion and preparation for the possible launch of a digital euro is a useful line of work. The entry of fintech and technological firms into the payment sector, especially after the turn of this century, have changed the playing field. Money and technology have gone hand in hand for centuries, but the digital technology is different because it involves expertise and challenges less familiar to central banks. So this involvement is all good, but it doesn't necessarily imply that eventually launching a digital euro is also a good idea. The arguments on balance today would not favor such a decision, in my view. However, the ECB plans several years of work before any decision is made. So there will be time for a careful consideration of all the pros and the cons. So in the few minutes I have, I will mention 5 arguments among those which are most frequently cited in the discussions. I will elaborate only on 3 of them for the sake of brevity. I will only mention the title of the remaining 2 and leave them for the discussion. So the first argument which is made is that the ECB must be ready for the demise of cash. Now, the vanishing of cash is a myth. In the 22 years of its existence, euro banknotes have increased steadily in value at a rate of 10% per year. A similar increase, only at a slower pace, was observed for other important currencies like the US dollar, the British pound, and the Swiss franc. Countries where cash is shrinking, like Norway or Sweden, are exceptions to the rule. What is really diminishing, in fact, is the use of cash for certain types of transactions, like online and retail store purchases. This is a welcome manifestation of the increased efficiency of the euro retail payment system, to which I now turn. The second argument which is made is that the digital euro is needed to increase the efficiency and the strategic autonomy of the euro payment system. Now, the euro retail payment system have undergone big changes recently, and all towards more efficiency and more safety. The use of cash is shrinking, as I mentioned, but remains important. Cards and smartphone applications are rising. The Single European Payments Area, the SEPA, allows free of charge bank transfer within and across the 20 Eurozone countries and beyond. Internet platforms are increasingly used for online commerce. I'm speaking from the United States, and I can tell you from personal experience that in certain respects, the retail payments in the US are less user-friendly than they are in the euro area. Now, all this progress was driven by market competition under the wise watch of the regulators, among which the ECB. A CBDC, which is a carbon copy of facilities already existing, would hardly contribute in a significant way. It's true that US networks like MasterCard and Visa have high market shares in Europe, but their dominance is far from established. In Germany and in Italy, for example, important alternatives exist. Whether policy intervention is needed to correct this situation is doubtful, in my opinion. I have to mention that the CBDCs which already exist in countries like, for example, in China, the Bahamas, and Nigeria, which have already introduced their CBDCs, for the moment are not being very successful. For example, 2 or 3 years after its launch, the Chinese CBDC is little used, in spite of the multiple means of pressure which are available to the Chinese government to prop its success. The third argument I want to elaborate on is the need to help financial inclusion. Financial inclusion is a worthy goal in developing countries and emerging countries, but in advanced world, financially excluded individuals are a slim part of the population, and they are likely to be such by necessity or by choice, because they lack sufficient funds or because they are unwilling to approach a bank. A digital euro, which would require the same actions as opening a bank account, would not make a difference. Let me just mention the titles only of the two other arguments that I mentioned. One of them is to provide an anchor to money in the digital age, and the second is the effect on financial stability. And we can deal with that in the discussion. Let me conclude. Our Eurozone payment system is modern and quite efficient. It is privately owned, but subject to close oversight and ruling by the ECB, the Commission, and the legislators. A CBDC would upset this balance with a regulator, namely the ECB, becoming also a market participant in competition with the private ones. An invasive form of public intervention like this one would be justified only if clear evidence were to emerge of malfunctioning in the present system. But this is not in sight at the moment. I can therefore restate the title of my April paper, which was Digital Euro, when in doubt, abstain, but be prepared. Thank you for your attention. I look forward to your questions.
Thank you very much, Mr. Angeloni, for your intervention and also for being fantastically within the time limit. The second speaker is Mr. Miguel Fernandez Ordonez. Please go ahead.
Sí, muchas gracias, Presidente.
Thank you very much, Chairman, for your invitation to take part in this hearing. It's a great pleasure and an honour. Given the time constraints, I'm going to focus on the citizens' vision of the digital euro, not the user vision, which is what the central banks have rightly been doing. I'm going to talk about the positive effects of the digital euro in the economic system. And the most positive thing about the CBDCs in general if you look at the banks who've been looking into this, is that it resolves the problems that we have with the current system based on bank deposits. But to understand this, we need to understand the problems in the current system. And that's not straightforward because we tend to think that what we have is natural and we don't really analyse what are the costs of maintaining the current system. The main positive effect of the digital euro would be stability. The digital euro would put an end to the problem of bank crises, these destructive crises which undermine the payment system. And over the last 100 years, we have had 2 major global crises and about 200 national systemic crises. These crises arose because we were using an at-risk financial asset, i.e. deposits. Now, those crises wouldn't happen with the digital euro because it's a safe asset, unlike bank deposits, which are at-risk assets, financial assets. The digital euro is money, whereas bank deposits are not money. They are promises to return money. Digital euros are euros, but bank deposits are not euros. Deposits are just promises to pay euros. And if banks can't fulfill those promises, then you get crises emerging. So we have this benefit of stability, and that in itself would justify the use of the digital euro instead of bank deposits. But there is another important effect as regards the digital euro, which is that we could deregulate banking activities with it. And that deregulation would have a very important impact on growth because banking is the most protected sector, the sector subject to the most intervention of all economic sectors. In the last century, liberalisation was carried out in a lot of sectors that encouraged competition in international trade, in labour markets, telecommunications, transport, for example. And in fact, even the non-banking financial sector was quite liberalised and quite deregulated. Despite that, banking regulation has been going in the opposite direction. Ever more privileges and more protections for banks, deposit insurance, liquidity facilities, saving banks with taxpayers' money, resolution funds, and so on. And at the same time, we have seen the imposition of suffocating hyper-regulation, such as Basel III, which doesn't apply to any other economic sector. And it's not a trivial matter. If you look at the amount of regulation that we have, it's equivalent to about 2 Bibles worth of regulation. So if you look at this interventionism, it's the consequence of instability in deposits. All of these protection and regulations that have been put in place over time have just one justification, and that is trying to avoid a crisis affecting deposits. But now we can have the digital euro as a means of payment, and with that we could get rid of all of this protection and regulation, which we wouldn't need anymore. The digital euro doesn't need deposit insurance. It wouldn't need us to have in place liquidity facilities. It wouldn't require us to have resolution funds set up or to have prudential supervisors or a Basel III. And the elimination of this kind of protection and the privileges for banks would level the playing field. And it would level the playing field. That's very important to ensure that we have effective competition. You can only have competition if everybody can compete on an equal footing without anybody having special protection from the state. And then there are other positive effects for the digital euro and all CBDCs. They can resolve problems that we currently have. For example, we could have a direct monetary policy, so the central bank wouldn't have to change interest rates, and we would be able to take monetary policy decisions without having to worry about the impact on banking stability. There are other effects, for example, dealing with the centralisation of financial decisions or separating monetary policy from government finances. And there's a very important effect for Europeans, because if we had a digital euro, then we could have real European monetary union. What we have at the moment is just physical money, coins and notes. What we don't have is a monetary union for digital currency. So if we switch over to this safe money and liberalised payment systems, it will be very positive for citizens and businesses. It will be a problem for the banks, though, because they would have to change their business model. That much is true. However, as has been the case with other deregulation exercises. It makes sense to help the losers, help out those who will suffer from the impact of losing that protection. For example, you could help banks to separate their payment activities from their financing activities, or you could help them to become providers of digital payment services, or help them to separate their functions. That kind of assistance to banks would make sense because it would help banks to change and to be useful in this new system. But what doesn't make sense is helping banks to maintain in place protection, which is not necessary for them. And nor does it make sense to impose barriers on the use of the digital euro, which is what is being proposed when it comes to the limits of the use of the currency. With that kind of aid for banks, all you would be doing is helping the banks to carry on as they always have. And in that case, we will continue to have the same problems that we have, i.e. instability, a lack of a free market for payment services. And so with that, let me be clear. We should say to the banks that they will see the privileges and protection taken away. And if they stand in the way of the digital euro, which they might try to do, then what we can do is put in place aid for a limited period so that we can facilitate the transition to a safe money system and something which is fully liberalised when it comes to payment and financial services. Thank you.
Thank you very much for your intervention. Also, you have been perfectly on time. So once more, thanks. And the third speaker is Marieke van Berkel. Please, your 7 minutes.
Thank you, Mr. Niedermayer, honourable members of the Parliament, and thank you for giving me the floor in this important panel today. I had hoped to be able to speak. Sorry? I had hoped to.
Seems that mic doesn't work.
Okay, sorry. I had hoped to be able to spend a moment on the particularities of cooperative banks, as they're not generally very well known. But to stay within the 7-minute limit, I will skip that and limit myself to saying the following. As a result of the cooperative nature of my members, they tend to have a lot of consumer and SME clients. If I could just ask the slide to be proceeded, the next slide. And the deposit of these clients are a very important source of funding for the lending that our members do. This is why some aspects of the digital euro discussions have particular relevance for us. Next slide, please. Let me now turn to the topic of this panel and start by saying that we are in complete agreement with those who think that we need to discuss a digital euro. We need to be ready to accompany the change that goes through society and the economy, and we need to do that also when it comes to our money. But we also need to be sure that we ask the right questions and carefully evaluate their answers. So what are the questions that we still have? First of all, one of the questions that remains concerns the long-term effects of the digital euro on the diversity of the banking system and the financial stability. My neighbor commented on that as well. The discussion on holding limits in this context is key for us. The level of holding limits will determine the potential outflows of deposits out of our members' banks' balance sheets towards the ECB. And the more the outflows, the more difficult it becomes for retail banks such as mine or ours to finance their lending. And the more consumer customers you have, the bigger the problem becomes, which is also the case of cooperative banks. The problem will then be further aggravated in times of crisis when consumers look for certainty. This, in turn, impacts the capacity of banks to meet prudential ratios. And let me give you the example of some of the modeling that our members did to measure the impact of a digital euro holding on their situation. Calculations of what happens in stress scenarios with a holding limit of, for example, 3,000 euros show a potential reduction in liquidity coverage ratios of 70 percentage points or more. That is no mean feat and could bring some banks into trouble with their regulator and supervisor. Next is the question of the added value of the digital euro. I would argue that between credit transfers, direct debits, cards, international or domestic, wallet payment solutions already on the market, there is more choice than any individual almost needs. On top of that, you have just approved the regulation on instant payments. So we will see instant payments become the new normal. And then there's the European Payment Initiative, something I think that's very important to consider as well. The European Payments Initiative has been, for a couple of years now, trying to respond explicitly to calls from the European Commission and the European Central Bank to decrease the reliance on non-European payment solutions. It's an initiative of 14 large European credit institutions and acquirers, and as I speak, they are building to launch shortly payment solutions that will leverage instant payments, first of all, and cover the use cases of the digital euro. And what about the topic of strategic autonomy? Well, we haven't found anything in the proposals on the table that will prevent non-EU companies from offering digital euro wallets. Rather the reverse, we could end up in a situation where European banks are tasked with funding and defunding wallets that are held by non-European companies, while at the same time the proposals on the table risk overhauling the present equilibrium between public and private institutions and also the two-tier structure of the monetary system. And finally, there's the question of the mandate of the ECB. Reference is often made to Article 127, dealing with the smooth operation of payment systems. The question we have is whether that mandate can go as far as offering not just a payment scheme, but a complete payment solution with end-user solutions, setting also price levels for services that are offered. If we recall correctly, the protocol on the statute of the Eurosystem also states that it should act in accordance with the principle of an open market economy with free competition. Next slide, please. So what would be our recommendations? Well, first, as I said before, let's be sure to fully comprehend the consequences of what we're about to decide. Additionally, we would like to see a number of safeguards. The first of which is to set low holding limit caps inside the regulation. The ECB can be free to go below, but the legislator should set the cap. And we would think of an amount of 500 euros. Why? Because this would tally with the idea of a digital euro to replace cash. And after all, the waterfall mechanisms would still allow payments of higher amounts. Following the same logic, we would like to see more research into what's called the offline digital euro. Although we think that even an offline digital euro can be made to work in the e-commerce environment. And at the same time, it can more easily mimic the privacy aspects of cash than an online digital euro would. Next, please make sure that all actors in this increasingly complex payments chain have equal chances to make a business case. This should apply not only to the payee PSP versus the payer PSP by way of an interchange, but also to the credit institutions that will be funding and defunding the accounts that, as I said before, may be held by others. And a final point I'd like to make is we should be sure to allow PSPs the choice of using the ECB app or another app. This will be a means to preserve the border between an open market economy and that of a more centrally driven one. Well, let me stop here, as my 7 minutes are nearly gone. Thank you very much for your attention, and I look forward to the discussion.
Thank you very much, Madam van Berkel. I guess we had never here such a great time discipline, so thank you very much also to you. And last not least, Vicky van Eyck. Benchmark is high. Please, your 7 minutes.
Thank you for giving me the opportunity to present Positive Money's position on the digital euro. For those of you who do not know us, we're an international research and campaigning organization that works towards a money system that enables a fair, democratic, and sustainable economy. Today, I have 3 key messages that I would like to deliver. First, we welcome the Commission's proposal to protect access to cash for as long as is possible. Cash is the most inclusive, anonymous, and cost-free means of payment. 2, a digital euro is an opportunity to provide a universally accessible and safe electronic form of public money. Unfortunately, the current proposal on the digital euro undermines this ambition by heeding too much to the concerns of the banking industry. But there is still time for the EU legislators to fix it. 3, a more ambitious digital euro should have similar benefits to cash today, and it should be available through public intermediaries as well. The cash issued by central banks is crucial in establishing trust. People trust that the moment that they want to withdraw money from their bank account, that they can convert their bank deposits, which is private money, into cash, on par into cash, which is public money. Cash is the most liquid, anonymous, and risk-free asset that people have access to in the economy today. It's risk-free because it's a promise from the central bank to pay the owner of the money what the banknote states is its worth. And as opposed to private banks, a central bank cannot go bankrupt. Today, cash accounts for less than 15% of money in circulation, and this decline in cash has serious implications for our society. Without it, people would even more be reliable on private bank deposits, which, as Miguel has pointed out, are inherently risky, as we have seen through numerous banking crises. Without cash, people will lose anonymity. It will mean even more transfer of personal data into the private banking sector. For these reasons, we welcome the Commission's proposal for legal tender of cash. However, faced with an increasing demand for digital payments, and for the reasons that I just mentioned, we need a cash equivalent fit for the digital age. The digital euro is an opportunity to provide a universally accessible and safe electronic form of public money. And this is what the ECB initially set out to do, when in 2020 it announced that it would start investigating the issuance of the digital equivalent of euro banknotes. But the ECB has since backtracked on its ambition. It has now reduced its ambition to providing a simple digital means of payment and not digital public money. The distinction is key. If the digital euro is simply a digital means of payment, then people cannot store or save it. They can only use it to carry out payment transactions. So why has the ECB and the European Commission adopted this approach? The issue is if that people could store digital euros, then banks would have to compete with the ECB to attract deposits by, for instance, increasing the rate on deposits. Now, that only sounds fair considering that the banks are currently earning billions but are refusing to increase rates on their clients' deposit by very much. But banks have taken the argument further. They cry wolf that there will be massive financial instability due to the sudden and large outflow of bank deposits towards central bank digital currencies. I'm going to come back to this point on financial instability, but I first want to demonstrate the impact that the arguments of the banking sector have had on the current proposal of the digital euro and why it undermines the entire digital euro project, even its use as a simple digital means of payment. To prevent the digital euro from competing with bank deposits, the ECB and the European Commission have had to make the digital euro unattractive enough for people. The digital euro is therefore not to be remunerated, it will bear no interest, and there will be a holding limit. The ECB's current holding limit, proposal for a holding limit, is 3,000 euros, and it's worth mentioning that the banks initially pushed for 60 euros, although this seems to have been increased to 500 euros now. Moreover, the Commission has made it clear that people with a pre-existing bank account will only be able to access digital euros through their banks. Now, if I'm a consumer and I open my online banking app, and I see two very seemingly similar accounts, one where I can hold unlimited, remunerated bank deposit euros, and the other where I can only hold 3,000 unremunerated digital euros, I will surely not bother with the latter. I would not even be able to use the digital euros to pay for the security deposit on my new apartment. The current proposal is a missed opportunity, but the EU legislators can still fix it. We can still ensure that the digital euro has similar benefits to public money today, cash, and that it is usable for people. To do this, the EU legislators need to ensure three things. First, that the digital euro has a high level of privacy. As evidenced by the ECB's public consultation on the digital euro, privacy is a major concern for people. For this reason, the offline version of the digital euro is crucial as it is most able to mimic the anonymous nature of cash today. The design and choice of technology for the offline version need to be carefully chosen to ensure this. 2, people must be able to access the digital euro through an account with a public or non-profit intermediary, precisely because it is a public good. We welcome the Commission proposal that allows this for people who do not have existing bank accounts or for accessibility reasons, but we think this option should be open to everyone. 3, just as with cash, there should be no or temporary high holding limits. We think that holding limits are only appropriate if deemed necessary to prevent acute financial instability risks, namely the banks being unable to deliver on their obligation towards their depositors. However, numerous studies have shown, including from the Bank of Canada, that even in extreme circumstances, banks would be able to cover the large outflows of bank deposits towards central bank digital currencies. Other studies, including from the Bank of International Settlements, show that the risk of a bank run is unlikely, and that central bank digital currencies could increase the resilience of the financial system. Finally, it's worth noting that the Bank of England is considering holding limits in the range of £10,000 to £20,000. In conclusion, a digital euro should provide people with a safe electronic form of public money and should not be reduced to a simple digital means of payment. The current proposal can still be remedied to ensure that the digital euro is usable for people, has similar benefits to public money today, cash, and that it can be accessed through public intermediaries. Thank you very much.
Thank you very much, Madam van Eyck. You also kept to our standard on functionality. This gives us quite sufficient time for our discussion. We have, if I'm not mistaken, 12 slots for the discussion. The organization should be as follows. The members should ask the question within the time limit of 2 minutes and ask preferably to our guests, each for 2 minutes, altogether 4 minutes for the answer. So this is the logic, and let's start with Stefan Berger from EPP, who is also our rapporteur for Digital Euro file. Please, Stefan.
Yes, thank you very much, Chair. I'm not sure if I can speak in German, if the online expert can understand me. Okay, so then maybe I speak in German. Dann sage ich erstmal.
Well, in that case, first of all, I'll say thank you to our experts who've travelled so far to be with us. I think that what this brings out is that we live in a digital world and the future is likely to be more digital than we can even imagine. That's why we're now engaged in a debate on the issue of digital payments and how the digital payment environment could be completed. I have questions to pretty much all of the experts. First of all, to Mr. Angeloni. In your presentation, you stressed the role of the ECB. You said that it's a key question for the ECB because they would be a supervisor, but they would also be an active market participant. Could you tell us a little bit more about your thoughts on this issue? Then I have a further question to Mr. Ordóñez. You said that digital money will be real money, the real money. And you also talked about a liberalization. Well, isn't it rather the case that the banks will be faced with a monopoly actor in the form of the European Central Bank? And if there is to be a shift in favor of the ECB, and that private banking systems will end up being reduced in their dimensions, then how will that affect the granting of loans and credit to the economy as a whole? Then a question to Mrs. Van Berkel. You said there should be low limits on the amounts you can hold. I have a similar position to yours. But the ECB needs 3 or 4 years from the current state of play to actually having a digital euro that can enter the market. 3 to 4 years. So we don't actually know what a digital euro would look like. We don't know the technological aspect, if it's going to be blockchain or whatever. And the question is, in 3 or 4 years' time, will we need another political vote on the digital euro? Because are we just giving them carte blanche to do whatever they like if we vote at this point in time? And then Mrs. Van Eyck. You made the counter-argument. You said that holding limits should be infinite. But then you've got the question of what happens if these holdings go from private banks into the hands of the ECB. Surely that's going to damage the banking system. So how do you see the issue of getting loans into the economy? Where can companies find credit? So That's the first question. Thank you.
Let me just, for the sake of clarity, repeat for the other my colleagues the logic of the discussion. Please design 2 members, 2 experts for the question, ask 2 questions, and try to make sure that they will be answerable in 2 minutes. But as we save a little bit of time, let me now just go quickly through all 4 experts. But I would like to ask you to answer relatively quickly, ideally within 1 minute. So, Mr. Angeloni, the floor is yours.
I'm grateful for the question. A basic rule for the well-functioning of a market economy is that a regulator supervisor should not be a market participant, and no market participant should have regulatory supervisory powers. It would be like in a game of soccer if the referee was also a player. The game would not function. But the digital euro would break this rule because the ECB, which is effectively the overseer of the payment system, would also be a market participant. And I'm concerned that if the digital euro were to be introduced and perhaps would not get much traction for the reasons that have been explained, that the holding limit is very low, that is not remunerated, etc. If there's no traction, I'm concerned that the ECB would be tempted to prop up its acceptance by distorting the market and providing incentives for the digital euro against other forms of payment, private forms of payment, which is what's happening in China, by the way. I mean, Europe is not China, but if you, that's an extreme case. But if you look what's happening in China, the digital euro is not the digital euro, it's the digital renminbi, is not being taken up because the private payment systems are so efficient and have such a high market share and so working so well, not only in China but elsewhere as well, that people don't get the Chinese digital euro. And the central bank, the government and the central bank in China are providing all kinds of incentives and facilitating. They, for example, discounts on public transportation and all kinds of benefits to people using the digital currency. So I'm concerned that the intermingling of the regulatory power and the participation in the market would distort. But if I have another second, let me go
Please,
to
very quickly.
No, the other point raised by Mr. Berger. So the problem that the digital euro, which would be identical to a bank deposit, except that the funds will be on the balance sheet of the central bank and not of a bank, would shift funds from the banks to the central bank. And that is likely to create, not only increase the risk of run on the banks, but also increase the probability of a credit crunch, because the central bank does not lend to the economy. It is the banks who lend to the economy. So if the banks lose funds, they cannot lend to the economy as they did before, unless we want to go to an extreme system in which we only have a central bank getting deposits and lending, but this is a Soviet-type system, which I don't think any of us want.
Thank you very much. Now, Mr. Onodjes.
Sí, yo creo que es muy interesante lo que el señor Berger.
Yes, well, I think what Mr. Berger had to say was very interesting, because there is a widespread but incorrect idea
hay una idea general.
There is a widespread but false idea, which is that the central bank would have a greater role with the digital euro, but the opposite is the case. At the moment, we have an absurd system. If you look at what happens with money and payment services and credit, what we have and what allows us to have a digital euro is that we have a reform where money will be entrusted to the state as a service, and payments, whether it's payment services or credit, will fall to banks or any other entities, because that could be opened up to competition. At the moment, it's a monopoly when it comes to payment, and then protection and privileges when it comes to credit. So what will be the task of the central bank? Well, they would keep a register of the digital euro. They wouldn't intervene in the market. You have to distinguish between money and payments. And it would do the same as it does now if you have the digital euro, as it does with cash. At the moment, it prints the money, but it doesn't tell you what you do with your money. And what we did with the digital euro would be open to the citizens to decide and the intermediaries who would help them to use it with the infrastructure. But the central bank has made it clear that it wouldn't intervene. I think there's this image out there that it would, but it would be like keeping a land registry. It doesn't mean that you're going to buy and sell houses if you have a land registry. People just register their property, and it's the citizens who decide what they're going to do with their homes. So I think the advantage of a digital euro is that in any reform, the important thing is to know what the market should be doing and what the state should be doing. And the market does many things very well when it comes to providing services and so on, but sometimes the state does things well. And when it comes to the unit of measurement, money is issued by the state. It should be issued by the state, not by retail banks, as is currently the case. That's something the state can do well. And then the market would be left to do things it does well much more effectively. At the moment, you do have private businesses, but at the moment, despite all of the developments we've seen in fintech, they can't do anything without payments and a bank account. And that would put an end to the digital euro. People who want to innovate should be able to innovate, providing payment services with the digital euro.
Thank you. Now the third question to Madame van Berkel.
Thank you for the question. And I think that the question of having another vote is actually a quite relevant one. On the side of the banks, I think my intervention made it clear that we have very little visibility of what will be the impact on our deposit outflows. And I don't think it can be a surprise that that makes us rather on edge. It puts into question our role in the monetary system, and it puts into question the fundamental aspects of how we have built the economy right now. We would really very much like to see that we do the research first and then legislate. And when it comes to the modeling that we have done, we have offered to work together with the ECB, and we're very happy to do so, and to engage in a real dialogue that can create a mutual understanding of what will and will not be the impact on deposit outflows, so that we can build a joint picture, and based on that, start building a joint expectation on a retail digital euro or another digital euro, as there may be alternatives that we also may have to research, such as the offline one that we think should deserve a bit more merit and research before we legislate. So if it would be up to us, I think we would legislate only after the results were known. Thank you very much.
Thank you. And last question for Madame Van Eyck.
Yes, thank you. I have 2 points that I would like to raise. The first is that we don't think that we can jump from bank deposits to suddenly central bank digital currency with no limits. We have no interest in seeing the banking system crash. But we do think that a temporary holding limit that is gradually lifted through stress tests and research is the correct way to go. I think also, just to say, there has been research done on the 3,000 euro limit, and it pretty much showed that they would have zero impact on the system. So we're just saying this should be gradually increased to higher limits, especially considering that there are other central banks that are thinking of much higher limits in the 10 to 20,000s. And the main reason we argue this is because we want the digital euro to be usable for people. On the credit allocation of the banking system, I think this is a crucial point. I mean, it's something that's often pushed by the banking sector. If there's CBDC, we won't be able to extend credit anymore. But this needs to be broken down a bit, because first of all, it's absolutely not true that the banking sector needs a monopoly of payment systems and deposits to extend credit. I think what they would lose access to is a certain type of privileged funding. Deposits is privileged funding for banks, and moreover, it's guaranteed. If they lose it, they get state guarantees. Other companies don't have this kind of funding. So it's true that it would reduce a certain type of funding that banks currently have, but we do think that the ECB and that there are structures in place because of the privileged relationship between governments, the state, and the banks, or role of banks in our society. We believe that the ECB and the central banks can accommodate anything that will happen in terms of funding to the banks. Thank you.
Thank you very much. The second in row is Paul Tang from SND. So please, 2 questions within 2 minutes. Thank you, Paul.
Thank you, Chair. And let me first say that I'm happy that the European Parliament has started with the discussion. I think it's important that we take position in this debate, because I fear that debate will go in any direction. And I think it's good that the Parliament would take position. But I agree with Stefan Berger that given that the digital euro has not been worked out fully, that at a later point there should come a political decision, and we will have also put forward proposals to this effect. But I think the European Parliament should take a position. Hearing all the arguments, I think the main advantages of the digital euro are twofold. It's a safe asset rather than holding a bank account in an inherently stable sector. That's the main advantage. The second advantage is that it will enforce the European strategic autonomy. What is a eurozone if there is a stable coin introduced that crowds out the euro? What is a eurozone without the euro? I think we should be prepared for this. So these two arguments I find convincing. Mr. Angeloni, I was a bit, you have the rhetoric of a politician, but I don't hear the words of a professor. You didn't bring forward these two arguments, so could you go into this? It's a safe asset that people desire, may they not have the desire for a safe asset? And what do you think about the strategic autonomy? Was the Libra not a fair argument for the digital euro in the first place? Then to Mr. Fernandez Ordóñez, one concern is that the holding limits and the lack of remuneration will hold back the use of the digital euro. And I noticed in that regard that the Bank of England takes a very different approach. You say you need to you may pay with it, but you also may save with it. So they have higher holding limits, and in the Bank of England indicates that these are indeed temporary, that they may grow over time. How do you see the holding limits and the lack of remuneration on the usability of the digital euro? And do you agree with Vicky van Eyck that the ECB has been listening too much to the banking sector?
Thank you very much, Paul. First question was from Mr. Angeloni, please.
Yes, two very good questions. Now, concerning the safe asset, it's true that the digital euro would be, for the reasons I mentioned, would be an asset to the central bank. And the central bank is a riskless entity, whereas the banks, in principle, the private banks are risky, although the deposits are insured to a very large extent. But the fact that this would bring more safety to the system, it's an illusion. It's an illusion because, in fact, the movement of funds from the bank, to the extent that the digital euro is successful, the shift of the funds from the banks to the central bank would put the banks in danger, because it would facilitate a run from the banks, particularly the banks that enjoy less confidence, whether there are doubts on some banks, and the people will move from the bank deposits to the central bank. And so that would put the system in peril, would not make the system more stable. So this is one thing. Concerning the strategic autonomy, I think that, as I already argued, that the present system contains a good level of competition between European private payment facilities, non-European private payment facilities, banks, non-banks, fintechs, and all this is guaranteed. This equilibrium, this balance, is guaranteed by the supervision and the oversight of the central bank and the rules established by the Commission and by the legislators. So I think that the strategic autonomy is not in peril in terms of the possibility that stable coins or crypto. I mean, crypto is going up and down, but crypto and stable coins are very different assets. They are not used, and they will not be used in the foreseeable future for payments. It's impossible. They are too volatile. They are too costly, the transactions. So there's no danger, in my view, that crypto asset may compete with payment. So let me conclude by saying I'm a bit concerned when I hear at times even central bankers say that the digital euros is safer than the banks, than the bank deposit, because the task of the central bank, the ECB in particular, after the approval in 2013 of the SSM regulation, the regulation of the single supervisory mechanism, the task of the central bank is to ensure the safety and soundness of the banks. So I would prefer not to hear a central banker say that the deposits are not safe and the people better shift to the central bank to be safer. I think that's a dangerous statement.
Thank you. The second question went to Mr. Ordóñez.
No sé si la he entendido bien.
I don't know whether I understood absolutely, but I think you were talking about what would become of credit if we had the digital euro, if that would be shifted away from banks. I wasn't quite sure if I got the question.
I sort of sorry for that my question was not clear enough. What I concern is the usability of the digital euro is very much limited by the holding limits and by the lack of remuneration. In fact, there is no interest rate bearing on that. You could have the fear that with a holding limit of 3,000 euros, you can only pay, you cannot save, and that there's no point in holding it anyway. And the Bank of England takes a very different approach. I can see that. So that's my question. How do you see the usability, the user case for the digital euro?
Sí. No, yo creo que...
Well, I think that the limit has two important problems. One of the ones that you've just picked up on, they're not really thinking about the users. If the central bank had asked users about this, what user would have said, oh, please subject me to a limit, so I can't have 10,000 or 20,000 euros. Nobody's going to want that. People are going to want to do what they can do with bank deposits at least. So from the user standpoint, there's something in the way there, and that could undermine this. But at the same time, what you will be doing then is maintaining the current system of bank deposits. And what I'm saying is that once we have the digital euro, immediately, all of those bank deposits, which have been subject to exceptional protection, it's cost millions and millions of euros to rescue banks. We wouldn't need any of that if we had the digital euro. So you have 140 billion euros transfers to rescue banks. None of it will be necessary anymore. It's necessary for as long as we have bank deposits, because the alternative would be crises. But if we have the digital euro, then you don't need that anymore. And I think that once this is in place, even if you put in place limits, public opinion simply won't tolerate the maintenance of that kind of protection. And they will do what they did with monopolies in telecommunications or airlines or international trade. And there are losers. Of course there are losers amongst the banks if they don't change their business model, because the aim should be to help the banks to separate their activities, which are currently together, payments and risk, and they should focus on providing payment services in competition with everyone else, and then non-market credit services. So this would be helpful. Of course we should help the banks, but just helping them to delay things, I don't think that would be a good thing. We've seen this with businesses like Telefonica and so on. Sometimes when you push ahead with liberalization instead of holding back, what you see is that important telephone companies now are providing competitive services, and there are banks which will be able to transform. They will provide services using the digital euro, working in a credit market without having all of the state protection. So the limits, I think, are negative for users, but also when it comes to holding back structural reforms that we really need. This is the last major structural reform. There is no other sector of the economy which has that kind of level of protection and privilege that we see in banks. None. So this is something we need to do.
Thank you. The third in the row, Eva Popčeva, Vice Chair of the Econ from Renew. Please, Eva.
Thank you very much, Chair, and thank you to all the speakers for the very interesting presentations. Voy a empezar con la primera pregunta al señor.
I'm going to start with the first question to Mr. Fernandez Ordóñez. I understand what you're saying to us about not needing to maintain financial stability in this context, but you seem to be starting from a situation in which one day we have the current system with bank deposits, and then the next day we have a different system, which is a digital euro. But it's not going to happen like that. We have two systems that will coexist in parallel over a period of time. And for that reason, I think it's difficult to argue that we wouldn't need these kinds of limits or safeguards in place in order to preserve financial stability. So if we are going to have two parallel systems running together for quite some time, perhaps for decades, my question is whether you think that this holdings limit, for example, for the euro is something that could be amended by the central bank, or would it need to be the legislator that would do that? At the moment, we're looking at 3,000 euros. Would it be the central bank that would then be entitled to raise that limit, or would it be the co-legislators, the Parliament and the Council, i.e. more of a political decision?
I wanted to maybe pose to Ms. Van Eyck. I think you made the point on the necessity of the privacy and keep the possibility of privacy also of digital euro, and this was also the offline application. And there I wanted to ask you, what do you think, how can we actually strike then the balance between this privacy concern and, of course, our concern regarding money laundering? Thank you very much.
Thank you, Eva. First question was to Mr. Ordóñez, please. Put mic on.
Sí, bueno, estoy de acuerdo.
Well, you can look at the speed at which transformation could be done, and it depends on what you do. And fundamentally, it depends on how much help banks are given to shift their model. So we could put in place a series of measures, for example, to help them to separate their activities, to help them in some way to hang on to the clients that they have and to tackle the shift to the digital euro. There are a lot of things that you could do to move things forward at pace. But if we don't have these ideas in place, then I think it is reasonable not to do things overnight. So I said at the end of my speech that I think it would be acceptable to have some limits in place as long as the message to the banks is not going to be, don't worry, you don't have to do anything. On the contrary. So we need these things to be temporary and say, well, we'll start with a limit, like the English are doing. At the moment, they're putting in some kind of effort, 10,000, 20,000 euros, and they will keep changing that limit, because the important thing is the message that you send to the banks. You don't say to them, we will protect you, and you confuse banking stability with financial stability. Well, you'll get the maximum financial stability with the digital euro. It wouldn't help banking stability, perhaps, but we need to care about financial stability. So I think that since we still haven't made a start when it comes to designing the aid we will put in place for banks to go through this transformation, I think that's vital in any liberalization process. If you look at the steel industry in Spain, we put in place plans to help that industry to go through a shift. But you don't just stop taking away this protection over time. I think what you want is something that is there for a transitional phase, and the banks need to know that it's temporary and that they need to change. There's something that I think is very important. If you look at how the Bank of America is moving in one direction, and that is because of the pressure from stablecoin, they're gradually separating that business model. If you look at the balance of JP Morgan and any European bank, it's impressive to see that now the business financing in the US is about 70 or 80%, and in Europe it's the other way around. And they are making progress down that road, especially when it comes to stable coins. We didn't really talk about stablecoin. But if it's not the CBDC, then the stable coins are also subject banks to pressure to change, because clearly they provide services which are much cheaper, much faster, and without any help from the state.
Thank you. Second question went to Vicky van Eyck.
Yes, thank you for the question. As you said, privacy is not an absolute right. It has to be balanced against considerations of anti-money laundering and counterterrorism financing. I'm not going to comment on the technological aspect because I'm not a technologist. But for the account-based system, for instance, the proposal made by the ECB, also the consumer organization, BEUC, and I think the European Data Protection Board have, for instance, suggested having lower identity requirements for lower transactions amount online. And I think similarly for the offline version, it could be for lower amounts. And I think this can be achievable through the technology that we have today. Thank you.
Thank you. Next question will come from Henrike Hahn from Greens. Please, Henrike.
Yes, thank you very much, dear Chair. Thank you very much, dear experts, for being with us today. And as you might know, I'm a real supporter of the digital euro, and I think we should find the right answers in the European Parliament in a very profound way to the open questions. And I have several remarks and questions. So first of all, I would like to focus on the fees. PSPs can charge merchants for providing digital euro services. And while I understand the national to give PSPs economic incentives for providing good digital euro services, the current payments market is already extremely concentrated, and payment service providers at times charge disproportionate prices. And I'm therefore concerned that the benchmarks included in the Commission proposal are not sufficient to prevent merchants from being overcharged by intermediaries, and that these fees in turn will be passed through to consumers. So Mrs. van Eyck, could you comment on the adequacy of the pricing model proposed by the Commission, please? And then as a second part, I would like to touch on the digital and financial inclusion. So the digital euro will not be a magical instrument, but I think it should address this issue, and the Commission proposal doesn't go far enough, in my opinion, on this. And Mrs. van Eyck, could you explain a bit more detailed what further changes to the Commission proposal are needed to truly build digital and financial inclusion in the design of the digital euro? And as an additional point, I would like to address the wider macroeconomic questions surrounding the digital euro. Mr. Fernandez Ordonez, I understand that you are a proponent of the digital euro, as it would provide a safe asset for citizens to both store value and make payments instead of commercial bank money that is prone to bank runs and financial instability. So with this objective in mind, how would you propose to go about introducing the digital euro? And would you advocate for a big bang approach, introducing the digital euro on day one with no holding limit, or rather a gradual step-by-step approach building on the needed network effects for a currency? And furthermore, how do you assess the impact of a decline in commercial bank deposits on banks' ability to provide credit to the real economy? Thank you very much.
Thank you. The first question for Vicky van Eyck.
Yes. So unfortunately, I can't speak to the adequacy of the pricing model. This is not something that we've looked a lot into. I think our position on this is that currently, at least the digital euro provision should be free for citizens. Then how that is compensated, that's not something that we usually have any points on. So I will dedicate mostly to the second question, what would need to change in the Commission proposal. I think there are three main things. We think that it needs to be accessible through public intermediaries. So what we like about the Commission proposal is that it actually opens the number of intermediaries that can offer digital euros to people. So in the Payments Service Directive 2, there's a definition of PSPs, which includes post office services, public entities, etc. And we think that this should be available for everyone, not just for people who don't have a pre-existing bank account. Because the people who have a bank account are pretty much 90% of people, and people should be able to access a public good through a public intermediary if they choose to, but they should also be able to access it through banks if they want to. One of the main reasons for this is that we've seen our experience with cash. Banks have closed down ATMs and offices because it's not profitable, and I just don't think that the onus should be on consumers and people, individuals, to show that banks are not offering the public good, and then it takes years for governments to legislate on banks forcing banks to open ATMs, etc. So we would like to see this ability opened to everyone, and not just for accessibility reasons or people who don't have bank deposits. I think second, importantly, on the limits, I think it's spoken about about quite a lot since now. Just to be clear, we don't think the EU legislators should be deciding limits. We think it's within the mandate of the ECB as the issuer of public money. But we think that this limit should be gradually lifted. And also the text currently focuses a lot on financial instability as a primary concern for the holding limits. It should be one of the concerns. It is already a major concern for the central bank, but it should not be put at the forefront. This is kind of evidence of the influence of the banking sector lobby. And finally, on the offline version, this is extremely important because privacy is important to people. I think on the offline version, there's been some reports and discussions on the technology not really being readily available for this. I think it's because they're looking at pre-existing solutions from the big IBMs of the world. But I think this is a new product that needs a new innovation. And the technology is out there, but we do need to look into it. Thank you.
Thank you. Second question was for Mr. Ordóñez.
Sí, vamos a ver, yo creo que...
Well, I think that the problem is that we shouldn't be implying that liberalization means taking away all protection. When you liberalize, you do take away some protection. But I think it's wrong to say we're going to help you and not take away any protection. In fact, we're going to place barriers in the way of the digital euro. But having said that, you could do this with a big bang, or you could do this gradually. But at least we know what direction we're headed in. And for those reasons, I think that we should perhaps have some limits at the beginning, but we should make it clear that we will gradually remove that barrier. And in addition, we will remove the current protection that bank has, because if we don't have competition in payment services or credit, then we're not going to make progress. We're not going to be able to have credit provided when you have a bank in front of you that has zero-cost funding backed by the state. Then you don't have proper competition. So should we do it immediately? No. I think we've seen lots of liberalization processes and you have a time frame in place. But we should be aware that we don't want to keep having the problems we have now with instability, a lack of competition, indirect monetary policy, and so on. So this is what I think we need to be saying clearly. But then we should act very carefully, very cautiously.
Thank you. Next question from on behalf of ECR, Michael Hogefan, please.
Thank you so much, Chair, and thank you so much for the speakers for their elaboration on this hearing, and especially to Ignazio Angeloni. I very much liked what you said, and that's something that my group has been saying for quite some time now. Indeed, that cash is not going away. That's a myth. I mean, if you just look at other member states, indeed, than Sweden, and we see that that's not the case. On the strategic autonomy, we already have the instant payments regulation. We already have the European Payments Initiative. It shows that Europe is a place for innovation and that we can have that we can set up our own payment systems. So I think the digital euro is not something that's very relevant in that case. And indeed, that central bank digital currencies in countries where it is implemented has not been very successful. In China, for example, only 1.13, so 1.3 has the uptake of the digital renminbi. And financial inclusion, I totally agree, this is a non-existent argument. Now, on my questions, I wanted to ask questions to all the speakers, but since I'm only allowed to have two, the first one is to Marieke van Berkel. You talked about the holding limits and what this would mean for the banking sector and the potential outflows of deposits. Could you please elaborate on how the banking sector looks at this potential danger? Because I think this is very relevant also according to the holding limits and how, well, there's been lots of talk about gradually lifting these holding limits and how banks perceive this. And also to Ignazio Angeloni, you talked about the European Central Bank becoming the referee in a football game where it becomes one of the players. How do you look at the fact that the ECB will indeed start competing with its own members and how this role will look to be? And a final question to both of the speakers. We as Parliament, we have the power to reject this proposal. We believe, and especially my group, we believe it's a compromise that nobody really likes. I think that's clearly shown with the speakers today. We can reject this proposal because it's fundamentally flawed. How would your members respond if that would happen? Thank you so much.
Thank you. So first, Madame van Berkel.
Yes, thank you very much, Mr. Overveen.
Mike, please.
Sorry, Mike has moved the other way. Well, there's a couple of points with regard to the issue of deposit outflows that I would like to make. First is probably to do with the question of the digital euro should be successful, but not too successful. Because how can we make it successful, but not too successful? The only way to more or less make it successful is to implicate or imply that what the banks are presently offering is not good enough or maybe not safe enough. And as soon as you start doing that, you create doubt with consumers and you can no longer predict their behavior. And for us, this is something that's nobody knows the answer to. It's a bit of a crystal ball, but it's a worrying factor. The second point I'd like to make is that when people say, and even the ECB research paper is quoted, that 3,000 euros limit should be not causing any issues. Well, that study does not look on the impact on individual banks. It takes the average of all banks. But we all know, and that's why my introduction, I would have liked to explain cooperative banks. Not all banks have the same composition of clients. We happen to have more consumer and SME clients. We don't have easy access to funding in capital markets, and finding alternative sources of funding, in theory, is a possibility, but they are all more expensive. And more expensive funding means more expensive lending. So we should be really careful and connect all the dots when we're having this discussion. Yeah, and as I said before, we have done some modeling, and we would very much be interested in exchanging on the modeling that we have done. The figures as we have them do not look good. They do not look good for smaller retail banks, and we think this is a question that really should not be ignored and should not be brushed off with an easy conclusion that, well, the ECB says that 3,000 euros is okay when that study is based on the average of banks and not the individual banks. And then to the question that you asked me, what would you, how would you react if we would, how did you formulate that? Reject the proposal. Well, I don't think we should be unhappy if it was rejected. I would, I would think that the reflection that's presently going on is a valuable one, but it's too early to take a decision on the launch. So we need more time, more study on the aspects that I addressed in my introduction. Thank you very much.
Thank you. The second question went to Mr. Angeloni.
Mrs. Van Berkel has said, the limit of 3,000 euros per holder is very tight. In principle, it should not create macroeconomic problems, but it can create problems for some lenders, for some banks, particularly those who serve the small depositors, that has many depositors for very small amount. For those banks, for some of those banks, and I'm thinking in particular those that are less stable or for which there are doubts, etc., for some of them there could be a danger, and there is contagion in the system. This is what happens in the banking sector. If one bank runs into trouble, then the next one is also at risk. So, starting from some of the small banks, there could be risks. There could be risk for others. Now, the other problem is that there is a trade-off. So, the tighter is the limit, and 3,000 is quite tight, the less user value there is for the instrument. Let me make a very concrete example. In this moment, I have in my pocket, in my digital wallet, 5 payment means. Okay, I have 2 debit cards, 2 credit cards, and 1 very innovative fintech, all of which are very efficient, all of which have holding limits and transaction limits which are quite high. Okay, if somebody comes to me and say, I offer you another card which has a limit of 3,000 euros, I mean, what's the value of that? I mean, I have to get another card, another password, I have to download an app, I have to learn the security provisions, etc. What's the point of having that? So there is a trade-off between the safeguards or stability that would suggest to have a lower limit and tighter limits and the user value of these things. So that's a fundamental problem. Now, in terms of the power to reject the proposal, this is not my territory, but let me say the following. My ideal world would be one in which the ECB continues to work with the industry, continues to do research, because the research is not really completed. I mean, there's more research to be done, as Mrs. Van Berkel has said, makes itself ready for the possibility to launch a digital euro in extreme condition, if there are problems in the payment system, but eventually does not launch a digital euro unless those very extreme conditions and dangerous conditions in the system materialize. So the central bank is ready to come to the rescue of the payment system if there is a need, but in normal condition should not launch a digital euro. That's my ideal world.
Thank you. Next question is from Gunnar Beck from ID.
Yes, thank you, Chair. 2 questions. First in German, because I think the matter is of particular interest to my compatriots, and then I've got a second question in English. Erste Frage, digitale Euro.
First question, digital euro payments leave an electronic fingerprint. So the ECB can also have access to the electronic information and can restrict it. But what it can't do, just as little as anyone else can, is guarantee the anonymity of these digital payments. In the electronic fingerprint, as it were, that cannot be allowed to just disappear. So this seems to be that this is lacking with the digital euro. This anonymity, that is lacking, and we have that with cash payments. That is a question for Mr. Angeloni and Mrs. Van Berkel. My second question in English.
Mike, you said in a previous session that, and confirmed today, that the digital euro would make it easier for the ECB to combat recession and, to put it a bit provocatively, perhaps, to vanquish the slings and arrows of outrageous economic fortune by distributing helicopter money more widely throughout society. Now, I have to say I have some sympathy for your view that helicopter money may be preferable to the ways in which the ECB has created money so far, simply because the ways the ECB has chosen so far have vastly inflated asset prices and amplified economic inequality and also propped up financial institutions. However, I remain deeply uneasy about the suggestion that a further expansion of money creation could be any good. Maybe I could ask you to point me to at least one historical example where sustained money creation hasn't ultimately fueled inflation, and secondly, where it has indeed had beneficial economic consequences, including the deployment of economic resources. Thank you.
Thank you. I guess the first question went to Madame Van Berkel.
Yeah, thank you again for the question. Well, the protection of the privacy of our clients is something we take very seriously, and rightly so. And we also understand that as banks, we're held to somewhat different standards than, let's say, social media companies, because money is sensitive. When it comes to privacy rules to be followed in the context of the digital euro, I should probably say that we're relatively neutral. We will do what will be asked from us. But what we would say is that a design of a digital euro which stays as close to cash as possible will be able to offer more privacy, which is why we would, again, ask for far more research and exploration of the offline approach. We think this can bring more privacy than the online approach. An additional thing to consider when it comes to privacy is that if the decision would be taken to remunerate the digital euro holdings, which we are against as a matter of principle, this would even further reduce the privacy regarding the digital euro than we could already have now, because somewhat and somewhere, somehow, we need to trace who holds how much digital euro and how it's remunerated. Another concern would be that whatever the privacy options that are there, as banks, we always have to match the privacy obligations on the one hand with the AML obligations on the other. The tighter the level of privacy, the lower the possibilities we have to monitor money flows. But as I said before, we are relatively neutral and we will do what we have to do, as we do see privacy of our customers as very important.
Thank you. Wants Mr. Angeloni comment on privacy issue too?
Both important questions. In terms of the digital fingerprint, my impression is that the digital euro will make no difference in terms of privacy. The ECB has made clear that they don't want to see personal information on payments. They will leave everything to the bank. So all the back office work will be entrusted to the bank. So the banks will have the same information on the transaction of the digital euro that they presently have on the transactions on regular bank deposits. So they will have the same individual information that they have now on all the transactions. Once the information is there digitally, potentially it can be appropriated. I mean, it's an illusion to say that legal limits are 100% safety against the possibility of disclosure. So from this point of view, the privacy of people will not be safer under a digital euro than it is now. So no difference. In terms of the helicopter money is a sort of a very special argument which some academics, I remember, I think the first who proposed that was the economist Milton Friedman in the 1950s. In certain particular cases, he's argued that the money should be distributed from the helicopter. In fact, this has not been done ever by any central bank, and it is actually, my understanding, it's prohibited by the European treaties, because the European treaty says that the ECB should provide financing only against adequate collateral, and so not give money as a gift, as it would be doing helicopter money. So this is not one argument that some academics are making, that the CBDC would allow helicopter money. I don't think it's a valid argument, at least in Europe. Now, it's an important question is the effect it will have on monetary policy. Will it increase the money creation? What are the dangers of that? What is the impact on inflation? My impression is that all in all, the digital euro or the CBDC will have contractionary effect, not expansionary effect, but contractionary effect. Why? Precisely because it shifts funds from the banks to the central banks, where it will remain clogged and blocked, because the central bank does not lend to the economy. So that will subtract funds from the normal intermediation process. And so from this reason, it will tend to have a contractionary effect on credit and also on monetary aggregates, because the banks multiply deposits by doing intermediation, and the central bank would not do that. So that I think from a macroeconomic point of view, that is the likely effect of a digital euro.
Thank you. Was the question also for Madame Van Eyck or not? Please.
Yes, so The debate on the helicopter money, just maybe to clarify for some people, this originally started during times of deflation that we saw in the last decades. And it's about the effective transmission of monetary policy. So the idea is that since quantitative easing, interest rate hikes operates through the financial markets and the banks, it's not always effective in actually creating the change that the ECB is trying to do. So, for instance, as you mentioned, QE pumped up was a way to pump money into the economy, as well as some other monetary policy tools like longer-term refinancing operations. So similarly, with increase in interest rates today, it's not because the ECB increases interest rates that we then have higher interest rates on our deposits. It has to go through the banking system that makes a decision about this, and this is currently not being done. So indeed, in some academic circles and campaign organizations that fight for a money system that is more fair for people, there is this argument about having helicopter money. By the way, just generally on helicopter money, maybe the central banks have never done this, but the government did kind of do this during COVID when it debited people's accounts automatically. So, but just to be clear that within the debate of the digital euro, I think we're very far from using the digital euro for helicopter money. More research would be needed on this. And I think, you know, there's kind of the world that we would wish to see, and then the world we're in, and then there's all between. And the helicopter money angle is the world we wish to see someday. I said it because in that panel, we were talking more about the systems, but I also left it out this time around. It's something that has been researched by some of our partner organizations, but it would require a bit more research to see how this could work with the digital euro. But we're not quite there today. What's important today is that the digital euro is a safe electronic form of money, and we shouldn't lose this idea. And I think just one thing on the contractionary effect of the digital euro, I think, you know, in the same way that the ECB pumped money into the economy when we had deflation, there wouldn't be a contractionary effect on lending because the ECB could still do longer-term refinancing operations towards banks on really, really interesting interest rates for banks, and banks could continue lending to the economy. So, sorry, I just wanted to comment on that as well.
Thank you. Now let's conclude the first round with Chris McManus from Left, please.
Thank you, Chair, and thank you very much to all the contributors. And I do welcome this debate today, as I think we need as wide a debate as possible on the digital euro, because my strong concern is that it's remaining very much a niche discussion by a niche group in Brussels and Frankfurt, and that's not a very good situation for us to be in. And we need to, as much as possible, try and discuss this matter in a simple terms and with positive contributions. For me and my group, there must be a democratic step forward in how our economy works, with the power of the banks over workers and families being diminished, and technology being used to level the playing field between those workers and financial institutions. And that, to me, should be the yardstick by which we measure whether the digital euro is desirable. And while we are focused very much on the digital euro today, we do have to obviously recognise as part of a wider package, and one part of that package is the legal tender file, which seeks to guarantee the right to use cash in any format for every citizen. And therefore, I just want to pose a singular question to two of the contributors, Chair, and they're to Ms. Van Berkel and Ms. Van Eyck. As an elected representative, I do engage with people on the street and on our roads, in our towns and in our villages, and I do hear the people wrongly, but they are very much worried that a digital euro is very much about replacing cash. And while we here in this room know that's not the case, would you agree that us pretty much putting to bed, moving that whole discussion to one side by confirming, by guaranteeing, by ensuring, by winning that discussion that people have got the right to cash, an absolute right to cash, that must be and should be a necessary condition so that we can tackle that misinformation about the digital euro. Put it to bed once and for all, get it out of the way. That takes away an awful lot of the misinformation about the digital euro. Is that a necessary condition?
Thank you. So please, the floor is yours, Vicky van Eyck.
Yes, I often hear this concern as well from citizens, and that's why I always start my speeches with we need to protect access to cash. And I think it's important to keep repeating this. And in communications about central bank digital currencies, I've also seen the ECB start with saying that the right to cash needs to be protected. It's an information thing, and there should be better information. And I do look to parliamentarians like yourself to inform people about the difference between central bank digital currencies and cash. As to whether it should be first adopted to get it out the way, I think that's something for the legislators to decide. But in terms of information sharing, it really needs to be repeated. It bears repeating. Thank you.
Thank you. So let's start with the second round. First speaker. Oh, I want to ask the others too. Okay, so. Okay, please. Please, Madame van Berkel.
Yeah, I think for us also ensuring that our clients feel that they can have access to cash remains an important thing to be transparent about. And as cooperative banks, I think we are probably among those banks that are still available in the regions of Europe to offer cash or offer a face-to-face banking contact where some other banking groups have already withdrawn for pure well, let's say for efficiency reasons. We also have very large ATM networks. We know that we are reducing them from time. And I would say that if they are being reduced, it's probably because of the pressure to digitalize. So there is a direct link between the increased pressure on digitalization of services and the capacity and possibility to continue to offer cash. But let me be absolutely clear. We're very committed as cooperative banks to continue of reaching those customers who need cash. We're very much in favor of EU policies being non-discriminatory between what is good for digital and what should be good for the real economy and those who are not necessarily in a position to access digital means.
Thank you. Mr. Ordóñez, do you want to comment too?
Brevemente.
Well, briefly, I think that the ECB has been quite clear in saying that it's not going to touch the physical euro. That's my understanding. But apart from that, I think it's very important because cash, physical euro, is something that has the characteristics that we want the digital euro to have because it's a safe asset. In the 19th century, in many countries, what people had was physical means of payment which were issued in the form of notes from private banks, and we put a stop to that because of the lack of stability. And ultimately, the physical euro is an example of what we need to have. We want the digital euro to also be a safe asset, and we don't want to be using means of payment which have problems such as crises linked to them, and then are very costly to resolve. So I think that the digital euro and the physical euro is something that we should be maintaining without any restriction. We shouldn't be doing away with it at all.
Thank you. To be sure that we will not delay the votes, I will ask the other members to ask the questions shortly, and also those who will respond. So let's start the second round with José Manuel García Margallo from EPP.
Thank you very much, Chairman, and thank you to the speakers. I'm going to try to be brief, as you suggested. As you know, in Parliament at the moment, we're working on a number of legislative proposals which will have an impact on the payment system. So a couple of weeks ago, we reached an agreement between the Parliament and Council on instant payments, which will have an impact within and beyond the Eurozone. And as you will also know, this week, we're running to the end of the deadline for amendments to the regulation and directive on payment services. So we have these proposals and the digital euro. They will have an implementation period, but they also have a very similar set of objectives And in some cases, there is in fact overlap between them. So given that context and given these proposals as a whole, I have a couple of questions for Ms. van Berkel. With all of the proposals that I've just mentioned, do you think that this will cover the main challenges facing payments systems? And if the answer to that is no, do you think that the digital euro would help us to add to that and to tackle some of the challenges there?
Thank you. For all, or? It was question for
Van Merkel.
Van
Merkel.
So, Madam, please go ahead. Sorry.
I think my answer to that question would be that there is actually no, I would probably want to ask a counter question, but I don't know if it's possible, because you talk about problems presently being there in the payment market. But I would argue that, as I also tried to outline in my introduction, we already have a very large amount of building blocks in the market right now that offer our citizens an innumerable amount of payment solutions. They may be a bit different in one country to the other, but there are a lot of different payment solutions. And in terms of problems, I'm not sure there are so many that are already not addressed by the Instant Payment Regulation and PSD3. So if your question was, is it not so that Instant Payment Regulation and PSD3 already address all the potential outstanding issues, and do we not need a digital euro to add on to that? I would say, I would indeed think that with the Instant Payment Regulation and PSD3 PSR, the Commission and the policymakers are already tackling a lot of what some might consider outstanding issues in the payment sector. And it almost seems that a digital euro would somehow go against what the other two instruments are trying to achieve when it comes to the private sector. I hope that answers your question.
Thank you very much. The second in the row is Joachim Schuster from SND.
Ja, vielen Dank.
Thank you very much. I've got two questions as well. The first is to Mrs. van Berkel. Now, you were talking about reducing the holding limit. So, from a consumer perspective, do you think it makes sense for the consumer to have a digital euro at all? Because it means you need to have your normal deposit account and then have to set up another account. I mean, I might not always remember at any given moment in time how much of my 3,000 euros I've used. Would the bank then open for me an account at the ECB? I mean, what's the point of this for the consumer? What's the additional utility of this construction? Do you think it would actually be used? The second question is to Mr. Angeloni. I think this would only make sense without a holding limit, and then that would raise the question of why don't we just do the whole payment system through the ECB? Why don't we just have the ECB deal with all of that? That would raise a new problem, though. Well, okay, you might see the current system as an excessive protection for banks, but the opposite position is that you break down the link that we currently have between the credit system and the payment system. What consequences would you expect for the credit system? I mean, I'm sure that banks would then have to ask for more money to grant loans, that's to say higher interest rates. So wouldn't that break up the whole branch?
Last question was for Madame van Berkel.
Thank you, Mr. Chairman. Yeah, on the question of the added value of a digital euro account, this is again probably why, as cooperative banks, we're so worried about deposit outflows. Just to give you an example, I've said a few times that our banks typically serve a lot of consumers. Our banks typically serve a lot of consumers in the regions of Europe, so not necessarily in the capitals. And let's just assume for one moment the income of those consumers. I'm making a guess, but I'm thinking that if those consumers on a monthly basis get something like between 2,500 and 3,000 euros income into their current account, it's probably a lot. They don't earn all what we might be earning here in Brussels. So when you have an income of 2,400 euros and the holding limit of a digital euro account is 3,000, what will you do as a consumer when the ECB tells you, well, you can choose between a electronic euro account with your regular bank, or you can choose a digital euro account with the central bank, which is very sure because we cannot fall over. My guess is that the consumer in that case will say, well, what's the added value of having two accounts, one with my bank and one with the central bank? I'll take the one with the central bank and I will do everything out of there. That's for us one reason to be worried about the digital holding. And what I just described, I think also describes the reason why we think we should have more research in the offline variant of the digital euro. Because the offline variant is a variant of a bank account that we do not have right now. There is not at present a real offline instrument that you could also use in e-commerce environments, and that could be, let's say, having the safety token of an ECB behind it. And as I mentioned before, when it comes to offline, the instrument could be very much designed like a cash-like instrument, which is one of the objectives that the ECB would like to pursue. It could mimic the cash characteristics of privacy. And as we said before, I think we believe that that does not preclude the possibility to use this instrument in an e-commerce environment, but we need to do more research.
Thank you. Now switch to Ignazio Angeloni with the second question, please.
Yes, I'm convinced that the ECB will impose strict limits. They've spoken about the 3,000, which is quite tight, and I'm convinced that they will keep it for a while, precisely because they are concerned about the same risks that we've been mentioning in this discussion. So the risks of disintermediation of banks and putting banks at risk. Don't forget that the ECB is responsible as a supervisor for the safety and soundness of the bank. So they want to avoid all risks that the banks may be destabilized. So they will keep a tight limit, and that will reduce the user value. It will displace some deposits. It will not displace cash. I mean, of all the issues that, in my opinion, may arise with the digital euro, the disappearance of cash is not one of them, because people want to hold cash. I mean, the data are clear. They want to hold cash for the specific particular reasons and characteristics of cash, characteristics that the digital euro will never have. The digital euro will be more similar to a bank deposit, so they will displace some deposits. I have argued that this may have a contractionary effect, big or small, depends on the holding limits, but it will have a contractionary effect. Mrs. Van Eyck has correctly noted that the central bank can compensate that, try to contrast that, by refinancing the banking system. That's true, but any banker will tell you that the bank deposits and the refinancing of the central bank are not the same form of financing for a bank. They have different value. Why? Because the effective duration, the stability of the funding through bank deposits is much greater and brings much greater benefits for a bank, for a commercial bank I'm talking, relative to central bank financing. They have different characteristics, different timing, different stability. And so even if the central bank refinances the banks, which would be necessary if there is a contractionary effect, this would never be able to fully compensate the effect on deposit because the two sources of funding are different.
Thank you. Last on my list is Stasis Jakelinos from Greens. Please, your question.
Yeah, thank you, Chair, and thank you all the contributors. I will make some comments and eventually ask a couple of questions to Mr. Miguel Fernandez Ordonez and also to Mr. Angeloni. Let me start with cash and about the myth of cash disappearing. Yesterday, I arrived here on the Lufthansa flight or Brussels Airlines flight, Lufthansa Group, and tomorrow I will leave on the Lufthansa flight directly. On both of these flights, I'm restricted in using my cash, and the airlines prohibit me, don't allow me to pay for their services on board by cash. I think this is a symbolical indication that cash is disappearing, at least in certain areas. And what I am forced to do is to pay by private payment methods and by privately issued money. So now let me move to structural, elements in this debate and discussion. I think the problem and also the opportunity is for us to differentiate between the payment methods and also the structural business model, which Mr. Ordonez alluded to, and we can discuss that forever, as the banking lobby said to me. You cannot change the primary business model with a fractional banking. When banks issue loans instantly, the deposit and current deposit appears on the banking balance sheet on the other side, and this is privately issued money. So what has been confirmed by a former governor of the Swedish Central Bank, that most of the money currently is privately issued money in the banking system. And this is the fact. And we have to discuss that, which we're trying to do here. So my question to Mr. Ordonez is, do you think it's necessary to discuss the central bank digital currency or ECB currency within the parameters that are proposed, including the holding limit? I think it's not necessary to have this as a payment instrument because everything is functioning, if we don't discuss the structural issues as you mentioned. And my question to Mr. Angeloni is, do you agree that the currently functioning banking model is a flawed in its essence, which had to be adjusted by things like Chicago Plan and Chicago Plan Revisited of 2012, and which is alluded into some academic works, including Hyman Minsky, Stabilizing Unstable Economy. We talk about the lending, but some of the lending is the flawed lending, Ponzi lending, according to Hyman Minsky, including lending to the government. So these are my questions. Thank you for this opportunity.
Thank you. So, Mr. Ordonez, the first question, please. Please put mic on.
No, yo creo que ha dicho muy claramente.
Well, I think I've tried to set out where we stand. Even if there aren't problems for the physical euro, it is clear that a digital currency has enormous advantages to it. And therefore, we're bound to see people wanting to use more digital money because with the euro, the physical euro, you can't have the same advantages. But what is true is that if we don't have the digital euro in the form of public money similar to cash issued by a central bank, something that can't fail, well, what we're seeing is this gradual decline of the physical euro and people shifting to risky private digital currency. And that's one more reason why if you give people a digital currency, it's useful to have a public currency. We often tend to think about ourselves, but one of the real advantages of the digital euro will be for small and medium-sized businesses. We're not talking about 12,000 euros or whatever. When we had the Silicon Valley crisis, what we were looking at was businesses that had $100,000 or $1 million. If they had had a digital euro, would they have preferred to have the Silicon Valley system where people ring up and they can't get hold of their money? Or would they have preferred a digital dollar where they could have got hold of their money without any problem? For small and medium-sized businesses, the digital euro is something that could be very important. It would mean that you could have a public money At the moment, it's something that only one kind of business can access, and that is banks, because we do have a digital euro, but what we have at the moment is that the European Central Bank, they're not introducing a digital euro, they're simply giving access to the digital euro to citizens and to small and medium-sized businesses, allowing them to use a public digital euro, which is already being used by retail banks.
Thank you. And the last question went to Mr. Angeloni.
I think the question to me was whether I agree or not with the so-called Chicago Plan. Let me clarify. The Chicago Plan was a proposal which came out in the 1950s, I think, in some U.S. quarters, whereby there should be a very strict separation between narrow banking and the rest of the financial system, in the idea that if the narrow banks are kept safe, then the rest of the financial system can fail and nothing will happen to the economy. I disagree with this view for two reasons. One more important and another one perhaps more dubious. The most important one is that we have seen, at least in the recent crisis, we have seen that the crises arise more easily nowadays in the modern developed financial system. They arise more frequently in the financial sector and not in the narrow banking sector. And from there, they expand everywhere and they bring the economy down. The crisis of '98, LTCM, for example, was of that sort. Even the financial crisis of 2007, 2008 originated in the repo markets. Now, these markets are part of the financial sector, not of the narrow banking. So the separation between these two elements would be an artificial separation. It would not eliminate the risk of crisis at all. The less important and more debatable reason, but I think it's important, is that there are synergies between the different functions performed by universal banks. There are synergies between the payments, the deposit collection, the credit granting, the negotiation of securities, and all the aspects, and the advisory, the mergers and acquisitions. I mean, they are difficult to measure, these synergies, but they do exist. So I think the universal banking is a model, at least in our advanced economy, is there to stay. It may be a bad system, but it's better than all the other systems which have been proposed, and there is no alternative to a strict and careful and diligent supervision by the supervisor, and in the case of the Europe is the central bank, is the ECB, to a careful supervision of to ensure the safety and soundness of the universal bank. There is no alternative to that model in sight.
Thank you very much. So let me now, at the end, thanks to Vicky van Eyck, Marieke van Berkel, Miguel Fernandez Orñones, and also Ignacio Angeloni for attending our hearing. This was unusually rich hearing, I must say. I want to also thank all the participants that were listening to our exchange of views. As it was said, we are in process to forming opinion on the proposal of European Commission. I'm really not sure to which extent this hearing helped us to find a simple response, but it opened a lot of dimensions of this question, and I guess this is definitely contributing to our effort to form our opinion on digital euro. So once more, thanks to all our experts, thanks to all MPs that ask, and let me now conclude this session. We have a few minutes to stretch our legs, and in 4:30 we should start vote, probably a few minutes later. Thank you and have a good afternoon. This was interesting. This was very interesting.